This is Eric Mother with Mother.com, April 23rd, 2021. As you can see here, the US stocks have been open for about an hour and a half. In this video, we're going to be taking a look at the cryptos. It's going to be part 3 of a series I began about 2-3 weeks ago. And we can see cryptos are down slightly. I'll say slightly because if there's going to be a sell-off, this is just the beginning. And we can see this is Ethereum. So Bitcoin trading at 49316. Let's take a look at those charts. And again, this is going to be part 3. So I would encourage you, if you have time, to go and watch part 1 and part 2. The links of those should be in the description of this very video. So let's begin with Ethereum's 4-hourly chart. And it so happened that I saved this from yesterday, the 22nd. When it was trading at the highs. Lots of excitement at that point. But I was watching where the RSI was trading and I could see that it was coming back to test the same area part 1 and part 2 we're talking about, which is RSI 61.8 thereabouts. And again, we see here all-time highs for Ethereum yesterday with a declining RSI strength. As I was saying in part 1 and part 2, this is the strongest type of negative divergence. So the pullback we're seeing as of late yesterday and today is consistent with that look that I was seeing yesterday. And just do some house cleaning here. Take a look at the other chart I saved from yesterday when it started pulling off the highs. So you could see that this was developing yesterday mid-session, that there was the possibility of a pullback based on this very clearly well-defined negative divergence. So let's take a look at the current 4-hourly chart for ETH. And we can see that, yes, over the last 24 hours, more or less, we've seen this pullback here in the entire crypto landscape. And now we see the consequence of uniformity resistance based on the prior break. Now, a lot of these concepts are discussed in my channel over and over and over again. So nothing new here. In other words, the pullback that we've seen here is consistent with what the 4-hourly was discussing. Now, I want to go back to part 1 and part 2. And in part 1 and part 2, this is the line I was drawing. And there's some information here for us to glean from. So this was the improvement. RSI was declining, but notice what happened here. We have this movement. We clear that line and we see this move higher. So in a sense, clearing that previous negative divergence line turned into a buy signal in the short term. Now, as I always say, these charts are full of information. You can write several books just on this chart. If I extend this line this way, we can see that there have been bounces on this line based on movement below the line, back above it for the lows there. Movement below the line, back above it for those lows. And we've come and kissed this over the last couple of hours. And we are seeing an intraday bounce for the cryptos. So lots of information on these charts. In the short term, there's going to be a line to watch, which is the 4-hourly lows. Let's draw it like that. So this is a very simple line connecting recent lows on Ethereum's 4-hourly chart on the RSI, connecting the lows there, this double bottom, hard to see, but it's there. And again, we bounced on that line. So as long as we are bouncing on this line in the short term, we can see that the cryptos are stabilizing after that 24-hour reversal lower. And we also know that should they break below this line, that's going to be another fresh sell signal. If we take a look at the daily, and this is 6 months of daily data, there is a daily closing high there. There is a daily closing low right there. And this goes back to the concept I was talking about over this past week. So there's a base we can say on the daily chart. So one of the things that happened over the last 24 hours is a failed daily breakout. That's a red flag. Since it's red, let's paint it red. All right. And so now we know that we're on the watch to see what happens here, because if Ethereum is unable to hold and breaks below the base, breaks below this recent daily closing low, a break of that trend line, that area, that space would be a fresh sell signal and would be the second wrong, would set the stage for a move lower. Otherwise, the best case scenario here for bulls in this space is for eventual breakout above the base to continue the recent strong push in Ethereum. Now, on the daily, take a look at daily chart going back to February of 2020. We can see that the real sell signal is going to come at some point if and when we break below the RSI lows line on the daily. So it's a line to watch for later on, not now, but whenever it breaks this, we need to be vigilant for the possibility of an aggressive move to the downside, which brings us to the bellwether instrument in this space, and it is BTC. On the daily, it is important to note that this line has been broken by Bitcoin. This is a serious break. And what it means is that it now opens the possibility, the odds for lower prices. It doesn't mean that it cannot recover, but now that we've broken the trend line, the possibility for lower prices is at hand. It is important to note from part 1 and part 2 that we saw an improvement in prices here to all-time highs for BTC. But take a look at your technicals. They show a lower high. The RSI was not able to move above 69.1 on the daily as it made new highs. And since then, we've seen a steady drop. As far as BTC is concerned, again, these charts are jam-packed with information because there is a line right here to consider. So this green line happens to be where we come off the lows. February, March of 2020. Off the lows there, believe it or not, Bitcoin was trading at 5,000. The question becomes what changed between last March and now, right? But anyway, so this RSI movement here, this line, which by the way, believe it or not, happens to be around RSI 68.2. And we can see that this is where it's been holding when it is on a pullback mode recently. It's been holding the green line when it has been holding successful bounce periods. Even here, it bounced on this area. So all of these bounces, again, I want to emphasize that this is where it's been finding support on the green line. And you can see what I'm getting at right now is we broke below that line. What this means is that there's a possibility that this bull market in the cryptos is over based on this chart. We shall see. But all is not lost. One of the key observations for Bitcoin on the monthly is whether or not it can hold the RSI above 69.1. Again, on the monthly. As long as the monthly is above 69.1, there's a likelihood that there's going to be support, and eventually we try to break out again. Again, it is important to recognize that the monthly needs to hold above RSI 69.1 so that it can stabilize and eventually, potentially, move above this recent monthly closing high. Incidentally, the most recent monthly closing high from the month of March is now the new breakout buy point. Let's call it at about 58K. Now, let's take a look at the other scenario. If it goes on to stay and drops below 69.1, expect a massive sell-off. Now, keep in mind on the time, the moment when it's going to be cracking below 69.1, expect an aggressive move down. Aggressive. So what we've seen today, down 4-5%, is nothing. I would say down way more than that. In the 8, 9, 10, even 20% is possible on a single day. So should it drop below 69.1 on the monthly, be on the lookout for a big sell-off. Again, all is not lost. If we take a look at the weekly, one of the reasons why we are seeing this strong push over the last 2 weeks is because, yes, you guessed it, the RSI is dropping below 69.1. And as such, we are now open for lower prices. As I said, there's a lot on these charts. If I take a line here, connect to the previous highs, this line was instrumental. I mean, big time instrumental. So the line connecting the tops there and those tops, notice what happened here when we moved above the line in terms of timing. So if you bought that, and this is the weekly, 2-year weekly, this is this area here. In fact, I would say somewhere there. This is BTC when it was trading below 12,000 in October. So this, we can see, was a critical breakout of the RSI. Again, that in itself is jam-packed with information. Next time, be on the lookout for a breakout of the RSI as it did right there. But now that line is not done. We can take that line and extend it. You see where it's trading right now? Exactly on the line. So if it can bounce on this line on a week-to-week basis, then it starts its recovery attempt. And if the line eventually is broken to the downside, believe it or not, that's a fresh sell signal. So one of the instruments in the space that has been holding up very well is Ethereum. One of the reasons, if not the main reason, is as of this instant, Ethereum continues to hold its RSI above 69.1 on the weekly. So this is good as long as Ethereum is holding above 69.1 on the weekly. Chances of support are good. But if it breaks, just like Bitcoin has done, expect the entire landscape to be on a massive plunge status. In other words, it would seem like somebody has screamed fire in a packed, closed room. The exits will be narrow as panic ensues. Also, on the monthly, Ethereum continues to hold above 69.1. And as long as it is above 69.1, in fact trading at 89, it still continues to be stable to bullish. So Ethereum is holding up the crypto space as of this instant in terms of its strength. I wanted to end this 3-part series. This is going to be the last of that 3-part series by taking a look at the total crypto space as calculated by tradingview.com. As far as the entire crypto space is concerned, we can see that on the monthly, the RSI is above 69.1, and as long as that's the case, they should be stable to bullish net. Now keep in mind, this other period where we were above 69.1 was here. It so happens to be 2016 to early 2018 when Bitcoin was on fire. Remember, it moved from under 1,000 to 20K in this time period. Again, the RSI was the key. It moved above 69.1. But remember, at some point, the RSI gave up holding above 69.1 as of February of 2018. And we saw a massive drop in the cryptos. Massive, as in Bitcoin would go on to lose 80% of its value. So right now, this is something to consider, that eventually, should you see the RSI drop below 69.1 on the monthly, be on the lookout for a big plunge. If we take a look at the weekly chart for the entire crypto space, this week we are seeing a push below 69.1. So whether it holds above or below 69.1 is the key in the long run. Week to week, the last time we managed to jump above 69.1 was here. That time period was in October, November of 2020. So what the bulls want to see is eventual recovery back above 69.1 on the weekly. In a sense, Bitcoin is capturing the sentiment of this total crypto space, as we can see here. Now, on the daily, just like we've seen with Bitcoin, I can argue that there's already been a sell signal for the entire space based on the daily RSI line. This line has already been broken over the last 2 days. So that's a sell signal. It means the probability for lower prices are now on the table. And remember, there was a line that was gonna offer potential support. Just like we saw with Bitcoin, this line right here. This line is where we recover off the lows of February, March 2020. And again, just like we saw with Bitcoin, it's been bouncing on this line successfully. You can say all of these lows have come with support on this blue line, which happens to be conveniently around or just above 38.2 on its daily RSI. We came close there. I wouldn't say really as close as Bitcoin did, but we came close there for the lows there. So what happens? It is trading exactly on the line as of this very instant. So this is the key, in my opinion. If we hold the blue line, we could be recovering. So that's what the bulls want to see. Holding this line. Let's call it the last line on the sand in the short term. That's what the bulls want to see, is recovery and support around this line. Bears want to see a violation of that blue line, which would be something different since the lows of March 2020. So we can summarize by saying what we've seen in the cryptos, generally speaking, from an educational standpoint, we see that at the highs, the divergence I was talking about in part 1 and part 2 ultimately became the reason for this most recent pullback. This is the daily for Bitcoin. We saw that Ethereum, on the other hand, on the 4-hourly, gave us the same look with RSI 61.8 rejection. And we can see that Bitcoin on the daily has given a sell signal based on the prior support line that I was talking about in part 1 and part 2. This is a material breach. And now we remain on watch for whether or not it can hold the RSI lows line that has been support over the last year. If it stays below the blue and the black line, it means that the cryptos are done for now, and that it won't be for another 3 years minimum before they can get momentum again. Remember, in 2018, January, I mentioned that it was my point of view that we were going to be in a downward to sideways market in the crypto space for about 3 years. So in a sense, I was both right and wrong, because it's until late 2020 that we saw the push in the cryptos. So same thing's going to happen. It's going to be another approximately 3 years before they catch fire again. Why is that? Number one, you have to understand that it takes about 3 years to reset. Hence the ultimate mother breakout method. An original concept. Links are going to be in the description, or you can find about this in my channel. Ultimate mother breakout takes about 3 years, minimum 34 months. That's one reason why, for a full reset. Keep in mind, in 2017 to 2018, actually in 2016 to 18, late 18, early 18, sorry, late 17, this was the biggest price movement, the biggest journey it had ever undertaken. Because of that big journey, come on, it's gonna need a massive rest period. Now the same thing as I've been talking about. This is the biggest journey, price-wise, that Bitcoin has ever undertaken. It has gone to never before seen territory. Now, come on. You don't think it needs a massive rest? You wouldn't need a massive rest after your biggest ever marathon, breaking your own records? Yeah, you would need a rest. So that's one house cleaning I would like to talk about. The second one is, it absolutely, logically makes no sense. If you think you're going to sell one crypto, X, thinking it's going to go down, and then you substitute that purchase, selling it, and buying another crypto, Y, thinking it's going to go up. So these things, it should be plainly obvious they move in synchronized action. If Bitcoin is moving aggressively in either direction, the entire landscape of cryptos are moving higher. So please, this is something that, come on. If one crypto is looking good to you, the rest of them should look good. If one looks like it is done, the rest of them should look like they're done. Why? They move together. It's a sector performance issue. These things are not trading in their own vacuum. They are trading because the sector is trading in whatever direction the sector is moving. So it makes no sense to buy one and sell the other, or sell the other and buy the other. Totally makes no sense, in my humble opinion. The other house cleaning I would like to do is, generally speaking, when a market is due for a correction after this massive move, a couple of price targets off the highs, whatever the highs. So we can say about 65,000. So the price target on the downside is either 38.2 off the high, or 50% off the high. Percentages. The other percentage is 61.8, which I have to say this is my target on the downside off the highs, or 80.2%. The last time Bitcoin dropped 80.2% off the highs of late 2017, early 2018. And again, technical analysis is just all about probabilities, no certainties. So this is part 3 of 3, and I'm going to end it right there. Hope you enjoyed it. Clearly, from an educational standpoint, again, you can take any one of these charts and write a book about it. Lots of information. Lots of information. Let me end on this. Watch out for a major RSI break on the monthly in the months ahead. If you see this type of situation where you break a major trend line of the RSI on the monthly, run for the exits. And there's another one connecting recent monthly lows. So this connects, as you can see, the lows here, 2015, lows of late 2018, early 2019, the lows of 2020. At some point, this is a line to watch. This is going to be big picture situation in the months ahead. A break of this line would be a major, massive sell signal. What the bulls would want to see is a bounce on this line in the months ahead, if not years ahead. So again, like I said, there's a lot of information on these charts. We can write a whole series of books, but let me end it right there. The series was about negative divergence, and since it was about divergence, let me end with the 4-hourly for Bitcoin. Again, almost irrelevant in a sense because this is just small time frames, but let's say you trade a small time frame. We made lower lows, but your RSI is stabilizing. RSI is stabilizing above 30.9, which is the exact opposite value of 69.1. So this is positive divergence. In the short term, it could give the bulls a reason to see prices recovering. And we know that if this is violated to the downside, that's going to be a fresh sell signal. This is Eric Muadh with Muadh.com. Love light. Light love. Namaste.